Yo, what's up guys, welcome back to the channel. In today's video we're going to talk about how to compare Lendingclub returns versus stock market investing. When deciding between Lendingclub and the stock market, it's important to weigh risk, stability, and growth potential. Lendingclub offers fixed returns through personal loans or auto refinancing investments, while the stock provides variable growth with higher volatility. To compare, start by reviewing Lendingclub's advertised average annual returns, which is typically more predictable but capped. Contrast this with the stock market historical averages, often around 7 to 10% annually, but with frequent ups and downs. For example, Lendingclub may offer steady 5 to 8% returns, while stocks can swing from double-digit gains to losses in a single year. Next, consider your financial goal. If you prioritize stability and passive income, Lendingclub may suit you better. If you're aiming for long-term growth and can tolerate risk, then the stock market could be a lot more rewarding. Finally, use Lendingclub's calculator and stock comparison tools to run side-by-side projections. This helps you to visualize how $10,000 might perform under each option, guiding you towards a mix that balances both safety with growth potential. But that's pretty much it for the video, guys. Hope you liked it. Hope you found the information here useful enough. If you did, like, share, and subscribe for more helpful tutorials. Thank you guys for watching, and I'll see you in the next one.